So Dave, I'm going to make you a panelist now. There you go. Welcome back to F.A.C.E, Dave. You need to unmute. There you go. Got you, buddy. I got your back all the time, bro.
Yeah, thank you. I need that.
I know you do. We all, anyone in anyone in the public eye needs it. So great to have you back, David. And why don't we start with the elephant in the room? And of course, that's the Fed. And last time we had a conversation, you were looking for a pullback in yields. You were looking for maybe 1.5. So it was a pullback, didn't get to 1.5. And now we're at new highs. Are we approaching your levels where you think this part of the yield move could be completing?
Yeah, I think so. I still think we may make one more move back to 150 before we go up to 250. That, this last move surprised me a bit. I mean, I wouldn't have been surprised to see it back from 160 and change back to 190 or something. But this move up to 217 is more than I expected. But it still looks to me like you're likely to still try to make one more run at 150 before we, make the final push to 250 or thereabouts.
Okay.
It could go straight there and have it over with in a couple weeks. We may do that, but I don't think so. I really think more likely rates are headed back down here very soon.
Well, they the market seems to be front running the Fed, and I wanted to bring up Powell, because I recall a conversation you and I had because of your bullish narrative for a melt up in equities, is that you have confidence in Powell up to a point to where, there's nothing anyone could probably do. But, that's true that you think that at least for a while, Powell is going to be doing the right thing. So in your mind, what do you think he's going to be doing?
Yeah, let's put it this way. I do think Powell's been dealt a tough hand, and I think he's doing pretty well. What you want in a Fed chairman is flexibility and somebody who isn't going to get wedded to one view. And when he first started as Fed chairman, remember, he said, I'm on remote pilot here. I'm on autopilot, and we're going to hike rates. Well, I think he learned from a big lesson there, and I think he's much more willing to say, here's where we are in the moment, but that doesn't mean I can't change my mind or we can't change our mind. So I think that's why I give him, I think relatively highly of him in that position. However, what I'm going to tell you, I think is going to surprise you.
Okay.
I'm a man, surprise everybody, but I think this may be a one and done Fed hike.
Okay.
We're definitely going to see a quarter today. I mean, I don't think anybody doubts that. They've pretty much telegraphed that. I'm not saying Powell today is going to say this is it. I'm not saying he even thinks that right now. But this economy is heading for a recession, and quickly. We're decelerating quickly. This last move in gas prices didn't help anything. But as I said last time to you, and the time before that probably, the bond market's done the tightening for the Fed.
We've already look, here's a TLT. TLT, it's a proxy there, David.
Sure.
I mean, look at what it's done in 3 months. Yeah.
Yep. And look at the yield curve. Look at which is almost inverted. Look at junk bonds have come down right to a point where I think it's an inverted head and shoulder. Put up HYG, and I think you'll see something there. But put it up on a 4-year chart.
Okay. Looking for it. I know I have it.
And even investment grade bonds, all the bond market is backed up. And what I keep saying is this is a more fragile economy than we've ever had. This is
there's HYG, Dave.
Now put it on a 4-year if you can. or maybe even a 5 year.
I didn't know. You should have told me you were bringing your telescope today. Okay, there you go.
There. Now you can see there, looks to me like you go back there and you see a left shoulder, you see a right shoulder right here. I think we're going back to 80, we're going back to 89.90 before we roll over much more dramatically. So I think we've pretty much completed the tightening. I think what's ahead for both stocks and bonds is a big rally. I came out yesterday on Twitter saying this isn't just a correction bottom. This looks like March 2020. It looks like 2003. It looks like 2009. Obviously, not quite as dramatic as any of those, but this is a big bottom in the stock market. We're going to see something over the next and it might even stretch beyond 6 months, but certainly the next 6 months. I've been talking about a melt up. That's what this is. But everything says systems go. You're going to see big moves in an awful lot of stocks and groups. And nobody's prepared for that. I can tell you, I had thousands of posts yesterday telling me I was an idiot for thinking that. So there's nobody bullish out there right now. The sentiment is as negative as it can get.
Yeah, the sentiment is, Dave, and Blake, I'll let you in.
Yeah, sure thing.
That price damage on the averages hasn't been that terrible compared to previous time frames you talked about, but sentiment definitely is. I mean, I haven't seen the people this bearish. I can't remember because I'm in my 60s, but it's been a long time, David. All right, go ahead, Blake.
Hey, David, first of all, I'd like to say thanks for joining us, and this is Blake, and I just wanted to say, I know you're bullish here, and that makes perfect sense actually, and that the Fed is really walking on eggshells with the economy, and maybe it's more of a one and done. I think most people, I mean, you look at every bank out there, every bank thinks that we're going to see 4 to 6, maybe 7 hikes this year. But how would, and I guess I just want to ask you this, if the Fed is faced with, the economy or inflation, and inflationary pressures are probably going to be, increased because of what's happening with, the Russia-Ukraine situation. It's going to be a global, inflationary push that no one really even saw coming 2 months ago. What you're saying then is the Fed would rather, instead of cure the inflationary issues or try to tame those, they're going to get behind the market and say, we've got your back. We're not going to be raising rates. Is that basically what you're saying here?
The Fed put will be back.
Not really. No, not really, because to some extent, yes. But what I think is a big erroneous assumption out there is that the Fed watches the stock market and that's what they're worried about. The Fed is watching the damn economy. I mean, people don't understand. This economy is being hit hard. Gasoline prices went up $1 in a matter of months. Heating oil went through the roof. People, below the 1%ers are finding that they have limited budgets. Consumer spending. Look at the consumer stocks. Look at the consumer discretionary stocks. Look at Ford. Look at General Motors. Look at what's happening there. I don't think people at all yet recognize how much this economy is decelerating. And so that's why this looks like, that's why I use 2003, 2009, 2016. This economy is going to force the Fed the other way. Sure, they are between a rock and a hard place in terms of inflation and the economy. They're going to choose the economy, and it's not just the U.S. Think about what's going on in Europe. Think about what's going on in China.
Yeah,
I think people are blind to the fact that the Fed isn't stupid.
You sound like such a bear right now. You sound like Peter Schiff.
Let me finish. The China is in trouble, right? And again, I'm not talking about near term, but Europe's been hit hard by what happened in Ukraine and was already soft. So I think what people fail to understand is the Fed sees all that. They're not sitting here in a vacuum saying, well, gee, inflation's going up, we're going to ignore the economy. They've got to look at both. And even though it's not in the data yet to say the economy's in recession or going in recession, they are seeing things. So I think, and like I said, I'm not even sure Powell's there yet, but I think you give them another month of this kind of where we're headed. And I think you're going to look back and say, hey, it was a one and done, Fed move. And frankly, the tightening took place before the Fed ever started. I mean, the tightening was the bond market. So, and then it, certainly Ukraine helped the tightening in terms of what happened with prices. So I just think what's happened is what happens at all bottoms. Everybody becomes a macro analyst, and most of them don't do it well.
Yes, all the investments sentiment surveys, Dave. I haven't seen numbers like this on S&Ps and NASDAQ. And in fact, last time we had a conversation, it was this day right here. And we were on the air before the reversal, and we were talking about there could be reversal. And so far, it hasn't been able to get back and check this line, and looks like a breakout over 43.80 or so. So your favorite groups are what in this move coming up?
I think, as I've said before, I think this is going to be a very broad rally. It's going to be both. It's going to be both growth and value. It's going to be both cyclical and non-cyclical. It's going to be big cap. It's going to be small cap. And the areas that I like the best, I think semis are going to scream. I think you're going to see the autos do very well. I think you see airlines do well. I think you're going to see industrials do well.
Miners.
I've got copper going to $6 here in the next 6 months.
So miners you like as well?
I like miners. I like a lot. Steel I like a lot.
You like everything but banks and energy, right?
Exactly. Yep. I think the interest rates, if they come back down as I expect here in the next couple months, are going to hold the banks down. And I think energy rolls over here. I've been wrong. Obviously Ukraine took them up, but I still think that without Ukraine, I think oil was rolling over, and what you got is a 2-week pop. And I think it's starting to lose that now. So I think at the very least, oil goes back to 85. WTI goes back to 85. We'll see where it goes from there. It might fool around for a while, but if it breaks 85, I think the oil move is over.
Okay. Yeah. See this monthly candle, Dave?
Yep.
Yeah. Not bullish. So you've had a lot of success recently in metals. I know you took heat in the metals, as like one of my associates did for a long time, and finally being rewarded. And look at Vesa Breed, one heck of a move in Newmont. Would you tell people to book profits or just buy a break in the miners now?
Yeah. Obviously, I can't give advice, but what I will
that's right.
What I will say is that this move down this last 5 days in precious metals is a classic. What you see in a new bull market or in a bull market is corrections are steep and fast because they don't stay down long. So I my target pre-bust, meaning the next 6 months for gold is 2,500, for silver is 50. And I'm coming to the conclusion that those are going to be proved to be too conservative.
Okay. And here's your copper play in Fremont. So we've covered a lot of ground. Anything, and I know that you also like the Aussie. Is that correct in your price targets here in Aussie?
Yep. I think the Aussies. I think both. The loonie and the Aussie are. They're commodity economies. I think they will benefit from this move in the metals and other commodities. So I do like the Aussie. I do like that. And I actually like the euro here. I think the euro hit bottom, came down to the bottom of the trend line, or down to the trend line. And I think that can go to 130 versus dollar. So what I'm talking about is a weak dollar here also. I think the dollar, what we did with sanctions and everything, everybody knows this. It's been the talk of town for the last couple of weeks, but we're really pushing people out of the dollar in terms of Russia and China for sure. And so
They
I
saw
think we're,
weaponized the financial system weaponized, and you know what, Dave, and we're making or testing new highs up here. I saw an interesting news article. I don't know if you saw it, that Saudi Arabia is open to accepting oil payments in yuan. Okay, so we've had the petrodollar for what, 50 years?
right.
So
Yeah,
that
no,
would also cut back demand for dollars, wouldn't it?
yeah, that's what I mean. Is I think this whole thing where we started using the dollar as a weapon is getting other people to wake up and say, hey, if we can find alternatives, maybe we should start thinking about that. So that becomes something that could push the dollar down. I think that chart basically says we retested the highs and we're rolling over. So I have an 80 target on DXY. I think
Down
that's
here.
and I think that's a target for 2022. So that's a big drop if I'm right.
Hey,
Yeah,
hey,
30%.
hey, Dave, this is Blake again, and you struck a nerve with me since I love currencies, and you mentioned earlier that you thought that the Fed wasn't going to be as aggressive raising, it's going to be basically a one and done, and expectations are completely the other direction. It would be very interesting if the dollar fell as dramatically as you're expecting, with the Fed, becoming less hawkish. That would be something that I don't think any of us have ever seen in our lifetime. Would you agree with that?
Well, keep in mind, if you're less hawkish, you're pushing rates down. I mean, you're pushing money in, so you're increasing the dollar.
Oh, I'm sorry. You know what? It's early in the morning for me. You're exactly right. Actually, you're exactly right. But that would be a big drop. I mean, because expectations are so frothy right now. So,
oh yeah, no, it'd be a huge drop, but I think that's where we're headed, and I think we're heading there. I think we're heading there. If you look at, when was that? Back in my eyes aren't too good here.
The COVID 2020 or
no, way back in 2014, was it 15?
Oh yeah, this was a high 16 up here.
No, go back a couple more years. The big run up.
No, this okay.
No, back right there. Go up.
No, okay.
You're up. That you're going to retrace that is what I'm saying.
Okay.
This isn't a very clear head and shoulder, but that's what it is.
Yeah,
that's a big top. That's whatever that is, 6 or 7 year top, and I think you're going down from there.
And you're not a Cassandra saying it's the end of the dollar's reign, because when we get to the bust, and I know that's down the line, you're talking what for the upside in the dollar?
Yeah, I think the dollar can get to 120, maybe even 140 in the bust. Again, the bust to me is the biggest decline we've had in the post-World War II era in global economies. Bear market bigger than anything since 29. In that kind of environment, they're going to still run back to the dollar. So I think you can have one last hurrah on the dollar after we get this decline. It all sounds crazy. It's big volatility. We're just in a very unusual period at the end of a super cycle, or whatever, and so I think you're going to see moves that we've never seen before, or certainly moves that happen a lot faster. So
okay, well, let's nail them down. Long-term objective in S&Ps.
I think 6,000, and I think that's pretty close, but that may not even be the high.
Okay.
And that's
NASDAQ.
this year. That's this year.
NASDAQ.
20,000.
Okay, and let's go with the Dow over 40.
45,000.
Okay. So Dave is basically talking 30-40% higher, and then that'll be it.
And by the way, the Russell 2000 I think can get to 3,000.
I know you like.
So
okay.
So that's they're basically from here you're looking close to 50% in some, certainly in the NASDAQ. So there are I think SMH can get to 400. That's a huge move. Over a 60% move. So QQQs, I think can get to, I forget what the number was I had, but it's well over 50%,
What was your target in semis?
400
Okay.
on
All
SMH.
right. All right. So some controversial calls, especially in this time frame where the whole world is bearish, Dave, and some great calls you made in the metals, and we're looking forward to seeing you be right, because that at least means God, you could really make a pile of money on the upside if you ride it correctly, and really be set up to be short for what's going to be historic as well. I mean, we're talking about history both ways, big time.
Right. Yeah, definitely. And I think people just need to step back and realize, fight your urge to go with the consensus and the sentiment, because it's just an overwhelming consensus that everything's negative right now. And I think at the top, it's going to be an overwhelming consensus that this thing has a long ways to run when it should be time to get out. So, people are going to have to learn that sentiment needs to be responded to in a contrary way.
And you don't look for new highs in the treasuries, just a bear market rally in treasuries while this is happening.
I think TLT can get back to 145, maybe 148, something like that.
Look at this, Dave. There's 200 days up here.
Yep. Where's that?
45.
Yep, 45. So yeah, something like that.
Okay.
And so that'd be a nice rally from where we're at, but it's certainly, I think it's still, if you stretch out the chart, I think it's still basically a right shoulder and a head and shoulder top.
Okay. How about this is a shoulder? This is a shoulder. What you're talking about. You're talking eventually bonds under par.
Well, my target on in the move after this rally, my target on TLT is 120. Could get a little below that, but I'm not looking for much above 2.5 on the 10-year, much above 3% on the 30-year, because I think the bust will take you right back the other way. And I'm still thinking we'll see lower lows in rates one more time, meaning below the 0.40 on 10-year. I think you could get a negative 10-year in the bust, and probably get the 30-year down to a quarter or a half, and then from there, as you know, my view over the balance of the decade is that you're going to retrace back to the early 80s rates, so 15% long bond, 15% 10-year, 20% T-bills, 21% T-bills. So this is kind of the last stage in the cycle.
So, in every crisis, the danger is you miss the opportunity. So, David, if people didn't have espresso or, double charge caffeine, I think you woke up some people this morning with some of your views. And I know you're not trying to be a shock jock. You really believe in this stuff. I've seen some of your forecasts work out very well. And I wish you and everyone who follows you a lot of green in the months ahead. I really appreciate you sharing your stuff with us.
And Dave, I want to say, this is Blake once again. I just want to say you have some really amazing views. Would you be interested in sharing some of your views and your charts on the Traders Summit at some point?
I'm sure I'd be glad to. What I tell you is Dale does it for me. If you guys can present charts, I'm more than glad to.
Oh yeah. I would just love to have you, like, your views and a one-on-one with you there. It's a little bit, it's a different community, but it tends to hit a lot of different marks, and would love to get your views there as well.
Sure.
Yeah, David's not shy. Go ahead.
Yeah, the one thing I will tell you is I'm not a trader. And so what I find on Twitter is the people that can't understand my calls are traders, because they expect everything to happen immediately. And as I say, these are trends that play out over months, not days and weeks.
Oh, we love it. I know having that macro theme and backdrop is great for traders to cling on to. So appreciate your thoughts here today.
Sure, you're welcome.
All right, David, I call everyone my trading warrior brother. I guess I have to call you my contrarian brother. I really appreciate you being here, and some very interesting times. And so cool that you and I get together on when we're very close to inflection points a lot.
Yeah.
So there
Yeah,
must be.
you seem to pick them.
Yeah, so I'll come up with some dates on the calendar, and really thank you, David.
Okay.
Good luck, and let's keep in touch. Appreciate
Yeah.
all you do for the trading community to at least give people balance on the other side of the coin.
My pleasure. Thanks, Dale.
All right, buddy. So you could follow Dave at Dave H. Contrarian on Twitter. That's it. That's where you follow him. That's where he tweets, and follow him today. So that's going to be a wrap for us. I want to wish everyone good luck on the Fed. You could join the team in 17 minutes on the morning edge. And remember, most of all, I know we're talking about money. Don't just count your pips, count your blessings, and you could always find something to be grateful for. And I'm grateful for what a great pre-Fed morning we had. So everyone, take it easy, good hunting, and we'll be back with you tomorrow. Adios. Thanks again, David.
Thanks, Dale.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.